You're with us here on a fresh new edition of Closing Bell. Last 60 minutes of trade coming up. We're coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Good afternoon.
What is the dialogue from Pushpa? Have you seen Pushpa, you guys?
No, I don't remember.
Jhukega nahi. Do you remember that? I don't know, Nigel. You're the movie buff.
No, I'm into cricket nowadays, right?
He's wondering, what are you talking? Which era? What? Pushpa? Who Pushpa?
No,
Surabhi,
Pushpa.
that is, come on.
No, but today I'm in the cricketing mode. I told Prashant this morning. It's like, today the Nifty was like a team that is batting second. You have to score 350 to 400 runs to win in a 50-over game. And it's not impossible. Because
you can do it.
It's been done before.
You know, guys, I love your enthusiasm, but I don't want it to be jinxed just for, the Bulls case or the Bulls cause. But yeah, Prashant, like I have to say, I was looking at global markets right now.
There's cricket, there's Pushpa.
There's everything happening.
Look at the market as well. It's 40 points lower. I mean, so this is incredibly positive outcome from the day's low. By the way, Pushpa will resonate because we just have the PVR management also joining us in just a bit from now, that connection with the markets. And the reason I'm saying it's incredible because look at Asia, it's all down. Look at Europe, it's down. US futures are lower. You've got the 10-year in Asian trade, the US Treasury 10-year, which is basically knocking at almost 5. It did hit about 4.98 or so, almost 5%. I think it's given up some of those gains. And amidst all of this, the market here is down just 25, 30 points. Actually, I think came back into the green also at some point, at one point in the day. Really, can't fault what's going on here at all. Later today, we'll hear from Fed Chair Powell, and I think that'll be important for yields. But the fact is there anything happening in terms of a fallout of yields going to 5%? Well, look at the screen today, and at least right now the answer is no. So we'll see how things go. Surabhi.
Okay, absolutely, we will. Let's see if the Bulls can hold that flag flying high for India in the last 1 hour. More on the markets in just a bit, but as Prashant mentioned, we've got some, I can say it's a blockbuster from PVR. I can safely say that because the numbers have been so strong for the quarter gone by. Let's actually run you through and then we'll get the conversation going with the management as well. There's been a big beat on the EBITDA front, on margins as well. Average ticket prices and spends per head, all of them have been above street estimates. Occupancy levels have picked up on a quarter-on-quarter basis. So let's talk about the trends and the sustainability of all this momentum. We have Ajay Bijli, Managing Director of PVR Inox, as well as Nitin Sood, CFO of the company. Gentlemen, good afternoon. Thank you for joining in. And I must say this is, a good continuation and encore because I was here the last time around we were doing this interview. And Ajay, I guess things have only gotten better, you'd say?
Absolutely. Couldn't have asked for anything better because, last year, this quarter wasn't good at all. People were still skeptical about coming out. Movies, I would still say, were not so bad. But yet, I think there was still some circumspection from a certain segment of the customers to come out and entertain themselves on the big screen. All that is over now. And now people have come out. We've had blockbusters doing well. And we've also had mid-sized movies doing well. Hindi especially, and also regional and also Hollywood, Oppenheimer, Barbie, Mission Impossible. Then in Hindi, we had Gadar 2. We had, of course, Jawan, the biggest movie, smaller movies like Rocky Rani, even Dream Girl, Fukre. So all sorts of movies, the way they used to work pre-COVID, have worked now as well. So it's very heartening to see that.
Yes, and it's been been in the making for a while now. But, Ajay and Nitin, want to get your sense. We'll talk about the movie, slate and the slate of releases in a bit. But my question is more on the durability of some of the metrics we've seen improving. For instance, average ticket prices have now moved to 276. They were closer to 239, 240 in the last quarter. Spends per head are inching higher and higher, 136 thereabouts. My question, Ajay, is that when you observe customer behavior, do you get a sense that the customer, irrespective of the movie release late, and that's the big, obviously, the big variant there, but is the customer willing to pay more, is willing to go more premium?
Absolutely. I mean, that's why our portfolio isn't one size fits all portfolio. I mean, India is a very heterogeneous, very disparate market. So we have to come out with, for a solution for every price point. And that's why the movie Passport that we've also launched just now doesn't address everybody, but it's addressing that Monday to Thursday customer who is price sensitive, but who's got plenty of time at his hand. So I see that all sorts of customers are there and all sorts of offerings we've got to cater to the needs of the Indian moviegoer who still wants to go out and entertain himself on the big screen. So it's pretty sustainable to get people coming. And I've always said that India is a very volume-driven business, volume-driven market. We have so many films in different languages which keep coming. So something or the other always clicks, and it gets us above that threshold of occupancies and business matrix, which makes our business click.
Ajay, Nitin, good afternoon. Prashant here. I mean, in those results, you can also count 6 tickets of Oppenheimer from my stable, my
You watched the movie what, thrice? No, Prashant, 3 times, no?
Thank you very much.
I watched it thrice, and I took my daughter and watched my wife. So, yeah,
That's a long movie you saw thrice. It was brilliant.
So, Ajay, would you say that... that a few months back, I mean, actually, two quarters back, we were having this debate whether it is, when things were not going all that well, whether people are now moved to OTT, it's a structural kind of a shift away, or is it the movies which need to get better? I think that debate, perhaps with this quarter, in a way, is settled, right? If the movies are good, people want to watch it on the big screen. Yeah. There's no doubt about it. That demand intrinsically is there. You would agree?
Absolutely. I think last quarter, lots of things were happening. OTT, the volume of OTT viewership was very high. Also, as I said earlier just now, that there was still skepticism of certain segments of people who are not still coming out. So there were a lot of factors at play which depressed our occupancies. All that is over now. Water has again found its level. People are coming out. Of course, even pre-COVID, they would only come out if the movie was good and it connects with them. People are going out. OTT is still coexisting. People are, sitting at home and watching a TV show as well. They're going out as well. So consumers are not robotic. They're doing what they feel like doing. They've got so many avenues there to entertain themselves. But yes, I think the Bollywood industry, which was really getting beaten up a lot last quarter, has really got its act together as well. And they're making movies for the big screen. And which is very heartening to see that, as I said earlier, even small movies, Oh My God 2, and Dream Girl 2, and even this one, Fukre, Rocky Rani was not like a rural Bharat movie. It was an India urban movie. That's also done very well. So I think the content guys are getting their act together. The consumers are going out. So I think, and they're sitting at home as well and watching. So I think it's the coexistence of various formats, various behaviors, which was prevailing last time and which has come around again. So it's very heartening to see that.
All right. Good afternoon, gentlemen. Nigel on this side. Just to put it simply, I think during the COVID phase, you all were in survive mode. Then it was revive mode. And now you all are in thrive mode because, those numbers are looking very, very good. And maybe the second half of this fiscal as well has good times for you all. So let's get a couple of numbers going, though. There were some synergy benefits that you all have been talking about in the past post that merger. How much of that has been realized? How much of that is pending? So you could give me a number on that. And the second part is the net debt number as well has come down by close to around 300 crores, year to date. That's in this fiscal. Where is that number headed?
So I'll request Nitin to answer that question. Nitin, would you like to talk about the synergies?
Yeah, Nitin, please go for it.
Yeah, so we had given markets a guidance that, ultimately once the integration plays out, we will be able to achieve a merger synergy of approximately 225 crores. And we believe that, 18 months is a fair time frame for us to get there. In the first half of this year, we are in the early stages of the integration process. But I think 125 to 140 crores of merger synergies is already played out. We are reasonably confident, a large portion of the synergies that we were estimating will accrue in the, first 12 months of the merger. So that's progressing very well. I think the second big thing which has happened for us is because the quarter was very strong with healthy cash flows. Our focus is to also, turn free cash flow positive this year. First 6 months have been free cash flow positive after our capex spends. And we've used all the surplus cash to reduce leverage. Net debt is down to 1,100 crores versus 1,430 crores at the end of last year. And third important thing, which, I would also like to highlight, there was a lot of talk about, how the margins would expand on the business. Our average occupancy in this quarter was about 32%, which is similar to what we did in 1920 PVR Inox combined in a pre-COVID era. And our margins this quarter are roughly about 22% versus 18% that we had in 1920. So there is a significant margin expansion also, which is playing out.
Okay, all right, Nitin, give us a couple of more numbers, right? Occupancy, I think you said 30% odd for the quarter gone by. Where do you see that number headed? Where do you see that number headed? And debt numbers come down to 1,300 crores. Do you see further debt reduction?
Yeah, so net debt number is about 1,100 crores at the end of this quarter versus 1,430 crores, which was as on 31st of March. Yes. Our average occupancy during this quarter was 32%. I think that number will continue to vary, quarter on quarter, depending upon content. But I think we ultimately think we should get closer to pre-COVID level occupancies of 29-30%, as some of the content supply stabilizes. We should definitely get there.
Nitin, hi, good afternoon, Surabhi here. Just tipping in with one question on this monthly pass scheme. I think this has generated a fair amount of buzz already. If you could give us some sense, ballpark, I mean, what is the kind of revenue accretion that you're expecting from this scheme? And also, there's a bit of a worry as well that could it start diluting margins because, it's a good scheme, you get maybe cheaper tickets. So will it start impacting, average ticket prices on a quarterly basis and margins on a quarterly basis?
Yeah, first of all, I think there will be a lot of such offers that will come out now that we have a large footprint available. The whole concerns around margin dilution, are unfounded because the prime idea of this to increase customer visitation behavior. And as more and more people come, there is likely to be an impact on higher admissions. And we run a very high operating leverage business. So more the number of people who show up at cinemas, there is additional spends on F&B, advertising, etc. So clearly, we don't see any impact on margins. Same is the case with some of the new stuff that we did in F&B, where we've launched 99 rupee products and unlimited refill on products on the weekends, on popcorn and Pepsi on the weekends, where we've seen a consumption uptake. People have upgraded, people are consuming more, and people are finding more value in those product offerings that we are giving. So absolutely no impact on margin. And the idea is to do more such things which, entice more and more people to come back to theaters.
So is the focus on volumes and not necessarily higher value growth? Would that be the right way of looking at it? Because you spoke about F&B spends, these 99 rupee offers. Prashant, I didn't know that. I think I should head to the theaters as well. He's talking about 99 rupee offers. I was unaware. But basically, to come back to the question, is it more to push volumes now? Is that the strategy?
Both. Can I say that both actually? So we need volume and value. And as I said earlier, it's a very disparate market. There is a price-sensitive customer there who also needs to be addressed. And there is a customer who's got discretionary time but doesn't have any problem with discretionary income. He also has to be attracted. So I think we're focusing on both, which is the reason why, as Nitin said, even after having this 99 rupee offer, our ATP, our SPH has gone up by 15%. So it hasn't really put any dent on our F&B spends. So very careful we are in terms of how we are working out these schemes.
Okay. Nitin, and how many of these 20,000 subscriptions have already gone? Would you have the number?
I don't have the number offhand, but there has been a very good uptake, a lot of demand for this.
Okay. And you can expand it substantially. I mean, if this takes off.
Absolutely. That's the idea.
Okay. And Ajay, there is no risk that, the guys who come over the weekend who don't mind paying, they, in their minds, won't get anchored lower because, you can watch 10 movies for 700. Why should I pay
700
very
for
high
one
price
ticket
for one?
weekend.
You don't think that's the risk? Or is that something that's crossed your mind?
No, we've studied all the cohorts. And the cohorts are people who go on the weekends. Because so many combination of cohorts, the data bank that we've got from our, the consumption pattern that we've got from our database. And we are finding people who come on weekends, they'll stick to weekends only. But there was a customer on a Monday to Thursday who had plenty of time, but he wasn't coming because he was price sensitive. So we're just attracting that. I don't think any cannibalization or any shift will happen.
All right, guys, good luck, and we will speak again soon. Thank you so much for joining us, Ajay and Nitin. Appreciate your time here on CNBC-TV18 as always. Good luck.
Thanks.
More movies, and it's quite incredible the way things have bounced back for PVR in the quarter which has gone by. All right, how should you position yourself back to the markets in the last hour? Mitesh is with us with exactly that to answer that question. Mitesh, hi. Good afternoon. Coming to you a little late, but it's been quite a bounce. The question is, would you, in the morning, there was about that 80-odd point bounce. It did not come up to this level, but you were saying that I would sit out. Would that still be the case, or have you shifted? Go on.
Good afternoon, Prashant. So we were not of the opinion of sitting out. Actually, we bought some put options on the Bank Nifty because between the two indices, it is the Bank Nifty which, to my understanding, is the underperforming index. And while I think, the Bank Nifty has managed to bounce back from the day's low, I think it's also come off from the day's high. So I think my sense is that I think, once we see 43,400 to about 43,200 range being tested, and then if violated, then I think we'll go aggressively short on the futures side. Till then, I think trading options may not be a bad idea. I think on the upside, 44,200, 44,175, that 25-30 point zone on the Bank Nifty will be a very strong supply zone. So till that is cleared, we'll hold on to put option positions. And if we see further decline happening, which is, I would say, a higher probability event, and the Bank Nifty starts getting below its 200 average, then I think aggressive shorting in the futures will be considered on the stocks, on the Bank Nifty. On the Nifty, we haven't done anything, so waiting and keeping a wait and watch kind of an approach over there. But again, shorting the Bank Nifty, the idea was that it is one of the, it is between the two, it is the underperforming index.
Okay, all right, Mitesh. Thanks very much, and we'll come back to you for more in a bit. We'll take a quick commercial break as well. Gurmeet Chadda will be with us when we come back. He's, of course, with Complete Circle. And Vinay Pahadia of PGIM India Mutual Fund also joins in just a bit from now. Stay with us.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
कलर भी मेरा ही फेवरेट मिला.
Dulux Velvet Touch with True Color Technology feels like home.
Dulux. Manali trip sorted.
मनाली और इसमें कैसे होगा? कैसे होगा? कैसे होगा?
SIP से होगा. इनके रोड ट्रिप का प्लान पता नहीं कैसे होगा, लेकिन आपके गोल्स जैसे घर, एजुकेशन या गाड़ी और वेकेशन SIP से सब होगा.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Woven by legends, stitched by traditions, the heritage of India is a festival of creativity, innovation and progress. Hyundai is proud to be a part of this celebration. Hyundai Ioniq 5. Power your world.
मैडम को पैसे से प्यार नहीं है.
भाई साहब, पैसे से प्यार है तभी तो AU से करार है.
ऐसा क्यों?
आपका बैंक सेविंग्स अकाउंट पे इंटरेस्ट देता है
3 महीने में एक बार.
मेरा AU हर महीने. इनको भी AU से प्यार हो गया. सोच बदलो और बैंक भी. AU स्मॉल फाइनेंस बैंक. बदलाव हमसे है.
Have you seen Law and Order on Peacock?
बोल.
साहब, मैं सच बोल रहा हूँ साहब.
सच बोल रहे.
साहब, मैं तो पानी भरने गया था साहब।
अच्छा, पानी भरने गया था। Oh, they have 50 Shades of Grey too.
Oh, this peacock.
All your favorite dramas as far as you can stream. Only on the Peacock Hub on Jio Cinema.
सबका ज्ञान करे परेशान? That's why download HDFC Sky, a new age all-in-one app जो बनाए आपको अपने दम पे एक्सपर्ट, क्योंकि यहाँ सलाह वही जो आपके लिए सही। HDFC Sky, बनो अपने दम पे एक्सपर्ट।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Welcome back. Well, the market is seeing a little bit of red, but nonetheless, the recovery has been quite spectacular from the lows. Right now, let's see if much of it can sustain or not. Focusing on some stocks next then. IGL is in focus, and it has been down in trade. Sonal is joining in. Now, this deals with Delhi rolling out a policy for more electric vehicles. I think they're looking at cab aggregators moving to the EV side very quickly. Sonal, so what's the story here?
Well, it is absolutely a negative for IGL because that would take away their volumes. First, to give you the news, Delhi government, they've gone ahead and approved the much-awaited EV policy for cab aggregators. It has been under discussion for almost a year now. The policy says that there is a timeline for conversion for cab aggregators to EV. 5% EVs within 6 months, 50% in next 3 years, and almost 100% in the next 5 years is what they're expecting. Delhi government is mandating 100% of all cab aggregators and delivery service providers to switch to EVs by calendar year 2030 itself. Now, what this means, of course, that it would take away incremental volumes from IGL once they switch to EVs, and ICICI Securities has put out some estimates as well. They are assuming an EBITDA per SCM of around 7.2 rupees. That is the current EBITDA per unit for IGL. It would mean an impact of 270 crore rupees on the company's financials. Now remember, the FY25 EBITDA is expected to be around 2,500 crore rupees. So around 9 to 10% of an impact on the EBITDA is what they are expecting. Prima facie, this is a material negative for IGL. But of course, this implementation will come with some ground challenges, and notwithstanding that, it is something that will impact volumes to the tune of 1 MMSCMD. Right now, they have CNG volumes of around 6.1 MMSCMD, out of which 30% come in from taxis or cab aggregators itself, and out of which around 50% come from taxis which are registered outside Delhi. So that means around 1 MMSCMD of their volumes could be impacted out of 6, and that could hit, of course, their EBITDA and bottom line as well, and that's why the sharp downtick on the stock today.
Okay, all right, got that. Thank you very much, Sonal, for the details over there. IGL taking quite a sharp knock. Let's welcome in Gurmeet Chadha into the conversation this afternoon. Then, Gurmeet, thank you for joining in. Well, who better than you? You're a Delhi guy. So tell us, I mean, is this a valid fear that's hitting IGL today? And what would your view be on the stock?
No, it is a concern, but I don't think so. I think there will be few changes. I think it would be difficult to transition so quickly, and there are a lot of political cloud with all these segment commands. So I'm sure there will be some modification, but the overhang will remain for some time. And the CNG volumes for IGL are upwards of 6 million metric cubic meters. If you take, of which CAG aggregators would be probably 40-50%. So if you remove how many cabs are in state, out state, there will be material impact. Also, the stock has been subdued. It also trades at about 16-17 times. So it's not that the stock is too expensive, but till the time this overhang remains, I think there'll be some concern.
Gurmeet, by the way, our Finding Great Chola Bhatura club is advanced. I was able to find over the weekend gone by. I was able to, my hunt continues, and I was able to find actually some good Chola Bhatura here in Bombay, all the way in Chembur. And there was a nice plaque on the wall there which said that I'm a Punjabi. I only see the first five alphabets of cholesterol. So I thought I must tell you this. Of course, that's chole. But it's life has gotten a little better. By the way, I also discovered that a lot of these outlets in Delhi, have introduced these packed things that you can get to cities. I mean, Sitaram, etc. in Delhi do that as well. So I don't know if you know that.
You need to have them fresh. You need to have them fresh. Packed thing doesn't work. It gets too soggy.
No, absolutely. Talk about Polycab. It's been one of your finds. I believe COVID finds, right? First identified it, I think, in 2020, 2021. Stock's done phenomenally well since then. Results came out. Numbers are looking super good. We spoke with the management earlier. Actually, not just Polycab, but even something like Astral. We had the management on. The stock's down sharply. Commentary is gangbusters. What do you do with these two names?
So Prashant, I think Polycab guided for 20,000 crore top line by FY26. I think they're already now at 4,000 crore quarterly run rate. So they're much ahead. I think they beat before that. They continue to gain market share in cables and wires. Their margins continue to expand. I think the FMEG business is still what is soft, but I'm sure over a period of time that will work out. They're very nicely transitioned from B2B to B2C. Now the focus even is on exports markets, and cables and wires are not just the proxy to housing, but the entire power manufacturing thing. So I think it's still a great play. Obviously not as cheap as what you got during COVID, which was in 3 digits actually, close to $1,000. So it's been a stellar rally, but I think it's a good steady business, boring business. You should compound 20% for long periods. So it's a core portfolio stock. May not incrementally want to add at these levels, but you still want to hold it. I think in pipes, we, beyond Astral also, we like APL Apollo. We like, there's a small company called GTL Industries. I think you interacted also some time back. So this business also is seeing, consolidation, premiumization happening. So a lot of companies, the value and the premium segment, the share is going up. The exports are picking up. And you get, the government orders, which is the one related to water. So it's a play on infra, again, housing, irrigation, the water infrastructure, etc. So I think we like this. We also like the other home improvement names like Kajaria and Serra. I think that in general, the housing demand is strong, and also the home renovation demand continues to be very, very strong.
Okay, got that. Very quickly, before we let you go today, Gurmeet, we were just speaking to the management of PVR Inox. I don't know if you could listen to the conversation. Numbers look great. They're trying a lot of new things, including wooing customers at the medium or the entry-level segment as well. What do you think? The stock's up about 22% in the last 6 months. Is it good for more?
Yeah, I think, it's a strong consumption play. I've always maintained that OTT and, cinema will coexist. It's not one against the other. At $1,200, some time back, you were getting it at probably 5 crores per screen. There are more than 2,000 screens. So obviously, you will see more conversion from single screen to multiplexes. PVR is a very dominant player. We continue to gain market share. What I liked this time was that even, so not only the ATP went up, which is $275, the spending per head also picked up. I think that's very important if you want to see more margins. And, it's been a tough 2-3 years for them starting from COVID. So I think things are coming back. All movie genres are doing well, regional, Bollywood, as well as, Hollywood as well. And I think people want to, move out more. I think and we also like the other names. So I think the hotels will do very well. Lemon Tree, for example, has just got Aurika, which is almost 670 rooms. Also in the hotel space, structurally, the business model is changed. It is more now, management contracts, more asset light. It improves margins, it, blocks less of capital, which again improves the cash flow profile. So we like that space. And also the QSR. I think we like Westlife. It might be a slightly soft quarter because of the long Shravan and slightly high food inflation. But that's another space you will see, festive season, long marriage season, World Cup. And in general, I think the average cooking time in India is down from 16 hours to now less than 12 hours a week.
Well, those are structural underlying long-term drivers, right, which all add up slowly but surely. Thank you very much, Gurmeet. Appreciate you joining in, and good speaking with you here. Vinay Paharia is Chief Investment Officer at PGIM India, a mutual fund. Vinay, good to have you with us here. Thank you very much for your time. So, just weigh in on the result season so far, and a couple of specific stocks, if you will. I was just discussing names like Astral with our earlier guest, Gurmeet. Do you own any of the building material type companies in your portfolio, and what's the view?
Yeah, hi, good afternoon, Prashant. Thank you for having me on the show. So, yeah, we do own quite a lot of building material owners. In fact, we are significantly overweight consumer discretionary as a sector in our funds. So we are very positive on this overall segment of the market. Particularly, we see a theme where consumers are upgrading. They are buying more of premium products, and this is more margin accretive for companies and top line accretive. So yes, in short, we are fairly bullish on this segment of the market as well.
Which categories, Vinay?
So we are positive on consumer discretionary as an overall theme, and within consumer discretionary, as you mentioned, building materials or a QSR, retail credit, anything which is to do with consumers trading up, buying more premium products, buying more discretionary products. These are companies which we own, especially the ones which also have fairly high returns on equity. So these are the type of companies which we own in our funds.
Okay, got that. So liking the consumer discretionary space. Vinay, hi, good afternoon. And I was looking at some of your fund portfolios, specifically the Flexi Cap Fund, even the large cap fund for that matter. There's a fair amount of representation of large financials in many of those funds. So what's your sense from here on? I mean, is that a position that you're comfortable holding? And if you were to put more money to work in BFSI, what spaces would you look at?
Yeah, hi, good afternoon, Surbi. So we are very positive on the overall financial space. And within financial space, we are positive NBFCs. We are positive most of the private sector banks, largely because of the fact that these are companies or segments of the market which have produced pretty high returns on equity in the past. They have capital efficient business, and they are present in a segment of the market which is growing fast, specifically the retail side of credit. So as you would notice, most of the retail credit markets are booming, and private sector banks or NBFCs are big beneficiaries of this trend. And we are participating in most of these opportunities.
No interest in PSU banks? And that's where there's been a absolutely crazy rally, if I could say.
Yeah. So I think PSU banks in particular, and most of the other companies which possess low returns on equity and low earnings growth, they have been delivering extremely strong returns in the last 3 years, especially since March 2020. I think that is a surprising trend which we have noticed in the last 3 years. Maybe that's due to increase in interest rates, which has been quite substantial, which has triggered most of these cyclical companies doing well. But I think over a longer period of time, most of these weaker ROE companies have delivered weaker returns or have underperformed the overall universe. And hence, we think that this phase is temporary, wherein we are seeing outperformance by most of these weaker companies. And over a period of time, markets will normalize and will start rewarding good quality companies.
You know, you I think own ICICI and HDFC Bank, at least what I can see. Maybe they are the top holdings, and you own other banks as well. Do you? Let me begin by asking you. I mean, the IndusInd, the Axis, or even lower down, Vinay.
Yeah, I think Prashant, if your question is which are the types of banks, I think most of the large private sector banks possess these qualities of having higher than average returns on equity. And these are banks which are participating in high growth segments of the market. So yes, we are pretty well spread out across the length and breadth of financials, specifically the banking space and the non-bank finance company space. So I think that's where we are invested in our financials basket.
Okay, and in the non-bank is housing finance companies or something else?
Yeah, it's mostly housing finance or consumer lending companies. I think companies, if you notice in the last 3 to 4 years, most of the other segments of retail credit markets have started doing very well, like personal loans, loans against properties, etc. So I think overall retail credit as a theme is doing well, and most of these NBFCs and private sector banks are participating in them wholeheartedly.
Okay, all right, we'll leave it there. Vinay, we'll appreciate you joining in, and great chat as always. Appreciate your time here on CNBC-TV18. Well, the market's down 26 points or so, 19,645. We'll take a quick commercial break here. We'll come back in just a bit. There's more lined up on the other side.
IRM Energy Limited, a growing city gas distribution company, launches an initial public offering of equity shares of face value of 10 rupees each through the book building process, with a price band of 480 rupees to 505 rupees per equity share. Bid issue opens on Wednesday, October 18, 2023 and closes on Friday, October 20, 2023. For risk factors and more details in relation to the issue, please refer to the RHP available on the websites of SEBI, the BRLMs, the company and the stock exchanges.
Hi. What's that? That's a Manish Malhotra. Not your dress. The cupboard. The laminate is a Manish Malhotra design.
Century Laminates by Manish Malhotra. Fashion for your furniture.
Live it up, live it up.
चाय मांगी थी, क्या है ये?
ग्रीन टी आपसे यही मिलेगी।
भाई मम्मी की इन्फ्लुएंसर वो मिसेस शर्मा ऊट पटांग टिप्स देती रहती है और झेलना हमें पड़ता है। अब क्या देख रहे हो पापा? तुम कहते हो ना कि स्टॉक मार्केट में बहुत सोच समझकर इन्वेस्ट करना चाहिए, बस थोड़ा सा ज्ञान ले रहा हूँ। किससे? हर एक स्टॉक्स एक्सपर्ट है, मस्त एजुकेशनल वीडियोस बनाता है और अच्छी इन्वेस्टमेंट की टिप्स भी देता है।
पापा इन वीडियोस पे ना जाए, अपना रिसर्च खुद करें या सेबी रजिस्टर्ड इन्वेस्टमेंट एडवाइजर से संपर्क करें। एजुकेशन के नाम पर कुछ इन्फ्लुएंसर्स अक्सर इन्वेस्टर को मिसगाइड करते हैं, नुकसान आपका होगा।
ग्रीन टी नुकसान तो नहीं करती।
You know what? All of the office is on Peacock.
Can we shift the meeting to 4 p.m?
कॉन्फ्रेंस रूम खाली नहीं है
तो कल करते हैं।
कल संडे
या मंडे को करते हैं।
ये मंडे को मेरे वाइफ का एनिवर्सरी है।
You have a wife?
संगीता।
Oh, see, Super Mario Bros भी है। Nice ना?
Oh, this Peacock.
Cult classics to premieres as far as you can stream. Only on the Peacock Hub on Jio Cinema.
त्योहार है, घर में नया फर्नीचर ले आते हैं।
तो दीवारों में मैचिंग कलर भी तो करना होगा।
नया एसी भी तो लगना चाहिए। HDFC बैंक एक्सप्रेसवे आ गया है ना?
अब इतना कर ही रहे हैं तो दुकान में नई मशीन भी लगवा लेते हैं।
सबके चेहरे पे रौनक लाते हैं। इस फेस्टिव ट्रीट्स जो चाहिए जल्दी से लेके आते हैं। अब इस त्योहार नो इंतजार, HDFC बैंक लाया है एक्सप्रेसवे, जहां मिलेंगे लोन्स, न्यू अकाउंट्स, कार्ड्स और उन पे ऑफर्स भी झट से।
21 रन से इंडिया जीतेगा। लिख के दूं क्या?
अरे क्या लिख के दूं क्या?
अरे जब मेरा फ्लेयर वुडी इतना मस्त दिखेगा तो लिखने के बहाने ढूंढने पड़ेंगे ना। फ्लेयर वुडी पेन, क्या दिखता है, क्या लिखता है, लिख के दूं क्या?
सुरक्षा वही चुनो जो सुपर हो, इसलिए मैंने लिया है SBI जनरल का हेल्थ इंश्योरेंस। सुरक्षा और भरोसा दोनों।
Welcome back. Well, the markets have moved to the low point, moved lower at least, in the last few minutes. When we started off the show, actually, we were well in the green. It slipped a little bit from the top. I think ICICI Bank, that's the one that's moved a little bit lower. So that's a bit of a problem point. But otherwise, from the broader markets, plenty of stocks are doing well. NBCC now is up close to around 9%. Big up move is what we're seeing out there. SJVN as well has spiked off. Pull up Vascon as well. That's another stock. Some of these stocks have seen a good move, particularly in the last 1 hour or so. But good time to shift focus to our special segment, where we get you a few, tidbits in terms of T-Street chatter. Nimesh joins us to tell us what is he picking up. Nimesh, a lot of odds against us this morning. But the Nifty, we're down only 30, 40 points. I think the bulls will take it.
Oh, absolutely, Nigel. But that's the whole point, right? I mean, despite weak global cues, geopolitical risk, the fact that all the Asian markets are weak, we are actually outperforming the broader Asian peers as well. But again, to me, it looks like it's more of a technical pullback and not much supported by the larger FI institutions. So that's overall feedback. The flows are muted as well as mixed with a negative bias. So it's not like there is a buying support which is helping the markets to recover in today's trade. I guess technically, I spoke yesterday as well. 19,630 is acting as a very strong support on the Nifty. So from there, using a bit of an uptick there. But again, on the upside, 19,830 will act as a very strong resistance. Clearly, the FNO positioning was suggesting a bit of a pullback as well. A lot of position on the short side. The PCR had moved to almost at 0.9. So I guess that's all played out in today's pullback. So that's overall feedback. I guess what's moving the market largely is the earnings, and that's going to be the key driver, at least in the short term. Look at today's big movers, both on both sides. It's largely the earnings which are reacting, on the stock side. So that earning trend should continue. But I guess today's pullback is morely technical in nature, but the FI flows are still negative.
Okay, in terms of specific stocks, Nimish, what's on your list today?
Well, the first stock on my list today, Prashant, is Minda Corp. Big mover in that stock and on good volumes as well. A couple of reasons. One, the Bajaj Auto commentary was quite strong. So that's having a rub-off on Minda Corp as well. There are large suppliers there. And also there is a strong buzz of the company winning a large order as well. So I guess these are reasons why Minda Corp is buzzing in trade today. So that's the first one. The second stock is Electrosteel Casting, something we don't talk too much about. Stock is almost at 52-week highs. I understand there's going to be a very large block in Electrosteel Casting very soon. I was just looking at some exchange disclosures, and interestingly, yesterday and for the last few days, some domestic mutual funds have been meeting the management as well. So looks like something big could come in Electrosteel Casting. So that's the second one. The third stock is IRB Infra. For the last couple of days, there is a good accumulation happening from larger HNIs. The flows are still positive, is what I understand. And leading influential investor seems to be quite active in IRB Infra, and that's the reason why you're seeing a big move in that stock in the last few days.
Nimish, any intel on Astral? I mean, the numbers were slightly below consensus expectations, but anything apart from that?
Not really, Prashant. In fact, even the management commentary was quite strong, right? I mean, they spoke to us, and the management was quite confident about the growth going forward. I guess it was more about preemptive, pre-positioning out of the earnings, and I think that's something which is leading to a fall in today's market. But otherwise, not much heard of in terms of negative news as far as Astral is concerned.
No, I was speaking with, thanks Nimesh so much for that, appreciate it. I was speaking with Surabhi to ask exactly that question, that numbers look good, commentary was good. What happened to the stock? It went down 6%.
Numbers standalone, like on like, compared to their own numbers were good. But compared to consensus expectations, I think they were slightly below. I mean, not very much, 3-4%. Yeah, but maybe pre-positioning, very high valuations. That's about it.
Yeah, that's what she was indicating. That I think we're talking even FY25, 26. We're talking 45, 50 times forward earnings, 2-3 years down the line. So therefore, that could have triggered a bit of profit taking on this one. Mitesh Thakkar is with us. So let's quickly go and get in some final trades. Then Mitesh, hi, afternoon. What's the advice? Not bad considering what the global picture has been like today. What are the final trades on stocks as well?
So, my advice is, basically to one, as I mentioned, we've had some put option positions on the bank Nifty. We're carrying them, but on the stock side, I think Bajaj Auto, and both Hero and Bajaj have done well, but Bajaj Auto is closing with a lot of strength in a weak market. This should see follow through in coming days. So that's a BTST with a stop at 54.50 for a target of 55.35. And Bandhan Bank been negative for last few days. I think numbers were also not very taken, were also not accepted as positive. So there is some selling pressure over there. This should see more declines. So this is a STVT with a stop at 231 for a target of 222.
Okay, all right. Thanks a lot for that, Mitesh. Well, Nestle is the other stock on our radar. It's surging post its numbers. Mangalam joins us to run us through the fine print. Well, Mangalam, as you told us earlier today, when you had joined, that time they were doing annual revenues of close to 10,000 crores. Now, on a quarterly basis, they're doing 5,000 crores. Good going, eh?
Good going for Nestle. In fact, strong gross margin improvement is what stands out this time around for them. The stock hitting a fresh record high as well. That's not all. The 1:10 stock split that the company has announced as well is something that the street likes. Most would have expected, 1:5, etc., because the face value was 10 itself. And to add to that, the company's EBITDA margins have also expanded by a good 70 to 80 basis points. If you just take a look at it, the revenues crossed that 5,000 crore mark, 5,037 crores compared to street expectations of 5,142. That's a mild miss, but I'll tell you why the street is not worried about that. The EBITDA coming in at 1,224 crores. The street was working with a number of a little over 1,200 crores. And the net profit came in at 908 crores versus expectations of 805 crores. The other 100 crores came in on account of an exceptional gain. Now, the domestic volumes grew by about 4%. Again, in line with, largely in line with expectations of 5 to 7%, mildly below out there. Domestic revenue growing 9%. At the same time, the export revenue, which is about 5% of their revenue, that dipped 6.5% versus expectations of 12 to 15% growth. And that's where largely the miss on the revenue has been. So nothing really to worry about. The gross margins, they've expanded by about 370 basis points versus street expectations of 80 to 100 basis points itself. And as a result of which, the EBITDA margins have jumped 220 basis points year on year. And the companies increased their ad spends. Despite that, we've seen a big jump in the EBITDA itself. The management said that domestic sales have actually grown double digit on account of mix, volume and price. E-commerce is doing well for them as well. And going forward, because of the healthy milk flush season, they will see further deterioration in milk prices, which is good for them because that means that the margin expansion that the company has reported this time around is likely to continue for the next few quarters. And the second half, obviously, we will see a better sales mix as well on account of festive season. So all these things in the near future look good for them, as a result of which the stock doing better.
Okay, got that, Mangalam. Thanks very much. Explains, the initial volatility on the stock. And finally, I think the market's made up its mind. Seems to be quite happy with Nestle, specifically that stock split, also aiding sentiment. We have Amrish Baliga joining in. Mangalam, thanks very much for that. We have Amrish with us, as I said, joining in for the last leg. Amrish, your thoughts on Nestle in particular, and if there's any other FMCG stock from which you're expecting maybe bumper earnings, anything specifically on your radar? From FMCG, that is.
Nestle earnings were decent, and I think, because of the split, I think there would be interest in the stock, although still, even after the split, it will be quoting at about 2,400, 2,500 levels. But still, I think the demand will be better than what it is right now. And, if you're looking at the wedding season, the festive season, as well as the elections over the next 5-6 months, I think this will put enough money in the hands of the general public. And the spend, as far as white goods is concerned and FMCG is concerned, I think that we should see a decent bump up. So other than Nestle, clearly, I would look at, buying Britannia, Dabur also, which has, fallen today basically because of that news in US. But then I don't think it should really affect too much. So I think even at these levels, I think Dabur is a decent buy. Among the white goods, I would possibly look at buying Voltas.
Oh, Voltas. All right. You believe that the worst is in the price, huh? Because, Voltas has been a little bit of a disappointment on the margins as well as on market share. But you think that it's the right time to get in. Got that, Amrish. But, normally you give us that one stock that you've done some research on and you believe that you'll be positive. Voltas we've got. What are that one particular stock that you want to tell us about?
The stock is Sona BLW Precision Forging, which is a leading automotive technologies play, which designs, develops and manufactures highly engineered mission-critical next-gen automotive systems and components. They have about 71 OEM customers across India, Europe, US and China for both electrified and non-electrified powertrain segments. And they have 9 of these state-of-the-art facilities across India, US, Mexico and China. 26% of the revenues actually come from the EV supplies and about 22% from hybrid. So basically, it is future-ready and a de-risk model. When you look at the order book position, that's about 22,000 crores, which is roughly about, the next 3 years sort of revenue. And most of it is EV-related. About 17,000 crores is EV-related, which is about 78% of the order book. So among the fastest growing auto ancillary companies with an expected PAT CAGR of about 35% over the next 3 years, look at the EBITDA margins, it's about 27%. So expected EPS for FY25 is about 16, and with this, my target price is about 640.
All right, got that. Amrish, stay on. We'll have some more questions for you right now. A very quick break, and we'll be back with the market flows.
21 रन से इंडिया जीतेगा। लिख के दूं क्या?
अरे क्या लिख के दूं क्या?
अरे जब मेरा फ्लेयर वुडी इतना मस्त दिखेगा तो लिखने के बहाने ढूंढने पड़ेंगे ना। फ्लेयर वुडी पेन, क्या दिखता है, क्या लिखता है, लिख के दूं क्या?
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
IRM Energy Limited, a growing city gas distribution company, launches an initial public offering of equity shares of face value of 10 rupees each through the book building process, with a price band of 480 rupees to 505 rupees per equity share. Bid issue opens on Wednesday, October 18, 2023 and closes on Friday, October 20, 2023. For risk factors and more details in relation to the issue, please refer to the RHP available on the websites of SEBI, the BRLMs, the company and the stock exchanges.
यार, मम्मी इज ऑन पीकॉक।
भैया ये क्या दे दिया आपने? 4 दिन में एक्सपायरी है उसकी। पिछली बार भी आपने यही किया था, चेंज करके दो बस। हाँ।
Oh, they got Parks and Recreation too.
अच्छा, this Peacock.
Iconic movies and sitcoms as far as you can stream only on the Peacock Hub on Jio Cinema.
त्योहार है, घर में नया फर्नीचर ले आते हैं।
तो दीवारों में मैचिंग कलर भी तो करना होगा।
नया एसी भी तो लगना चाहिए। HDFC बैंक एक्सप्रेस पे आ गया है ना।
अब इतना कर ही रहे हैं तो दुकान में नई मशीन भी लगवा लेते हैं।
सबके चेहरे पे रौनक लाते हैं। इस फेस्टिव ट्रीट्स जो चाहिए जल्दी से लेके आते हैं। अब इस त्योहार नो इंतजार। HDFC बैंक लाया है एक्सप्रेसवे, जहां मिलेंगे लोन्स, न्यू अकाउंट्स, कार्ड्स और उन पे ऑफर्स भी झट से।
It's time for hybrids. Your first job means your first investment. Choose hybrid funds. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Welcome back. Must say the weakness is returning, and there's been selling at higher levels. Just nerves are really out there, and you've got US futures which are still pointing southwards, and you have that speech coming up from the Fed chief. And from the time we started closing bell, this market has given up a good 60-70 points. Just a quick check on where the drag is. Financials anyway have been fairly weak, so your ICICI Bank, Kotak, those stocks have been down right throughout. Bajaj Finance is seeing some additional selling. That's one to keep in mind. And iShares has not shared the enthusiasm that we've seen on Bajaj Auto today. In fact, Amrish, let me make that our final question. What do you make of the huge reaction on Bajaj Auto? Definitely good performance, no doubt. But the stock has already run up. Even then, we're seeing a 7% pop on a weekday, otherwise, weak market day like today. What do you think of it?
I think it's clearly based on the earnings, and like I said earlier, with the festive season as well as the elections and all that coming, and again when we talk of the wedding season, clearly the demand for two-wheelers is going to move up, and I think that could be one of the reasons why there is interest, especially in Bajaj Auto as well as other two-wheelers. So I think this up move can continue for a while longer.
Okay, all right. Amrish, I wanted to ask you about Ultratech Cement. That's been the big mover actually of the last 1 hour or so. Those numbers look pretty good. There was no disappointment. And the buzz was that there was going to be a disappointment. So in spite of having higher maintenance cost, employee cost as well was higher. But they had the benefit of lower power and fuel costs. And that's what got the numbers in line. What's your view on the stock at these prices?
See, I think cement overall, I'm quite bullish because in the past 2 to 3 years, we have seen the demand moving up, but the margins had not moved up because the costs had moved up. But now onwards, I think we'll clearly see the cost being under control. And at the same time, we are seeing the cement prices slowly inching up. I think that will increase the margins going ahead. So you'll have high volumes and higher margins. So I think most of the cement stocks should do extremely well. And especially, I mean, the top funds like Ultratech and Ambuja, I mean, these are my picks in this space.
All right, got that. Amrish, we will then leave it on that note for today. Thank you very much for joining in. Appreciate you being with us on Closing Bell. Well, we are just down to the final 1-2 minutes of trade, and what looks quite apparent is that this is going to be a 60-point cut, no taking away from that. But again, if you contrast that with the kind of drop we've seen across Asian equities or the way Europe is down between 1 and 1.5%, maybe it's not all that bad. Anyway, talk about where the pressure was on the downside. Some of the IT reactions on the large cap side have been very, very severe today. Wipro really stands out with the disappointing performance for Q2 and a weak guidance for Q3. 3% lower on that stock. It kind of took some others down with it. Tech Mahindra was lower, TCS was lower. And then come in your financial names. So ICICI Bank, as I was saying, Kotak Mahindra Bank, these are the big ones on the way down. Reliance didn't quite support the bulls' cause today. Reliance is finally ending with a cut of almost 1%. And you had some selling in stocks like Hindalco and NTPC as well. Now, that's the weak side of the screen. On the flip side, we've had outsized result reactions. And actually, we had good result reactions on a lot of the big nifty winners. Bajaj Auto, 7% up. LTI Mindtree, about 6% higher over there. Nestle was up 4%. And Ultratech, as Nigel told us, that the results were actually, absolutely spot on. Nothing wrong with them at all. About a 3% up move there as well. So I guess, Nigel, the fact that we had good nifty earnings, largely speaking, maybe that partially at least saved the day.
Well, it's a very tricky market though, Surbhi, because if you bought that dip, you'd be making money. But towards the end, if you
didn't sell in time, you'd be losing.
You'll be again down close to around 19,600 odd. A few stocks that did very, very well though in today's trading session. Shakti Pumps, they got an empanelment. The street read that very, very positively because the quantum was very high at around 1,600 crores. So that stock went home with solid gains. You had NBCC that was up close to around 12% odd. So that stock did pretty well. Apollo Microsystems, well, that stock is up close to around 7.5%. For the week, it's up close to around 18%. Couple of other names, Vascon as well was higher in today's trading session, was lower actually. That one has recovered. You had HCC in the final hour of trade did pretty well. That one as well was up close to around 3% odd. So all in all, well, from where we started off, Surbhi, you'll be happy to see that we end with a cut of only around 60 points. But on the flip side, getting into the final hour of trade, you're expected Nifty, you'd be hoping the Nifty builds onto those gains. But maybe there was a weekly expiry-related factor as well that played out. And that's why we went closer to around 19,600. The bulls would have hoped for 19,700. The bears were hoping for around 19,500. So we are bang, middle of that range.
Absolutely. And I think a lot will depend on what commentary we get. If there are any remarks on these high interest rates when the Fed chair speaks tonight, because that US 10-year bond deal, before we sign out, let's pull that up. It is, refusing to lie down or lie low, 4.97% the last I checked. It's basically almost touching 5%. Let's see if we get that 5 in overnight US market action, or whether there's some talk down that comes in from the top Fed officials or not. That is the big watch point, along with, of course, all the developments in the Middle East. There you go. It is relentless at 4.9697. We have to watch this one quite carefully. Okay, with that, it's a wrap on this edition of Closing Bell. It's a goodbye from the entire team that puts this show together, but don't go anywhere. Our Thursday special big deal is coming up next.